Good morning, Paul Georgie from Allendale. It's Thursday, May 26th. The rains have dominated the weather pattern here across most of the Midwest, and with all these heavy rains, you expect grain markets to be higher. Well, that's exactly what we've got. We are higher here this morning in corn, up only 3 to 5 cents, however. The beans 5 to 7 higher, and wheat showing the most strength at up anywhere from 8 to 10 cents, and maybe even higher than that here on the opening. The weather is certainly the dominating factor around the world. Here in the U.S., too wet to plant in the northern plains as far as the wheat goes. In the eastern corn belt as far as getting corn and soybeans planted, and then you go across to Europe and you've got dry conditions in France and Germany, and talk of dry conditions in Ukraine and Russia is building. So those numbers are providing some support here this morning. However, the outside markets are giving us a different look here this morning. Everything is down. As I go down the list here, you get the dollar down 41, crude down 30, gold is down $6, and the stock market indexes are lower here as we speak. The news, we've got USDA weekly export sales out here this morning. Corn, the trade was looking for 350 to a million tons, came in at 779. Some of the highlights there is that China was bought 116,000 tons, and that was switched from unknown destination to China. And the sales of old crop corn was above trade estimates. Out of that million tons, trade was looking for about 700 coming from the old crop. It actually was 779 that came from the old crop. So enough or more news to provide support to that old crop July corn contract. In the soybeans, week sales there 157. Trade was looking for only 125 to 400. In the wheat, 250 to 800 was the range. Came in at 432 at the lower end of the range there. The other news that's being talked about heavily in the last several days is the prevent planting that producers might do across the Corn Belt. Just a few statistics for you: that 60 to 65% of the prevent planting taken comes out of the Dakotas, North Dakota and South Dakota. And in 2006, we had 1.2 million acres of total prevent planted taken. In 2010, we had 5.3 million acres that was taken under the prevent planting insurance. Estimates this year is that we may have as much as 2 million acres in the Dakotas that aren't planted. So you can do the calculations from that point. We've got producers, and our belief is that the farmer wants to produce a crop. He doesn't like going out there looking at his land growing grass and weeds throughout the year. So they're going to work very hard to try to get a crop in the ground, and we believe that the prevent planting could be less than what might be thought right now. Reuters released a survey of analysts yesterday. The analysts put the corn acres at around 90 million acres, down about 2 million acres from the USDA numbers released at the end of March. We also had soybean or NOPA crush numbers regarding soybeans here this morning. 129.3 was the estimate, came in at 128, and oil stocks were also a little higher than what expected. So that may weigh on the soybean complex here this morning. And of course, the wheat comments out of the EU yesterday, that group there put the EU crop at 130,000 or 130 million metric tons. The USDA's got that crop at 138.6. Over to livestock, cutout values there were up 8 cents in choice and down 9 cents in the select. Cattle margins coming out of feedlots right now have went from a positive for the first 4 months of the year to a negative just in a little over a week, as we've seen this cattle market drop sharply. Cash cattle traded this week from a range of 104, 105. A few traded at 106 on Tuesday. However, and looks to be more fill-in buying as we approach the Memorial Day holiday, as we hope for some clear weather to get some cookouts and some grilling done, and the official beginning of the cookout season. So that's some hopeful prospects there, and I think a reason why we've seen a rally in the cattle market yesterday. Supplies still continue to be burdensome as we look ahead here for the next several weeks, and mainly because of the competitive meats. We've got plenty of poultry, pork, and beef that we need to move now, and with higher energy prices causing retail purchases to be smaller than a year ago. And the hog complex, we had cutout values increase 87 cents. The strength that we've seen there yesterday could carry over a bit to the cash market, but again, the problem is cleaning up the meat supplies, and that's going to be dealt with here in the short term. It looks like the fill-in buying is complete in the hogs. Would expect it to be complete going into the holiday week. Next week, a short kill week, so packers will not need as many hogs during that period of time. So stay in touch with Allendale. We've got a lot of things happening here around the long weekend. We'll be happy to give you all the details and answer any questions that you might have. You can reach us at 800-262-7538. We wish you a successful trading day. We'll talk to you tomorrow morning. Thank you.